Right, what's going on, guys? This is March 6th, just a trading day recap. So yeah, I posted on my socials that I'm actually going to be doing an actual FTMO challenge with this strategy and documenting the whole process. So that'll be a separate playlist, but today I wanted to review this trade because it was a bit of a patience tester, I'll say, just simply because whenever you see a move like this happen and you're anticipating a move like this to happen and I missed it, and I'll explain why in just a second, but I ended up making, what was today, $5,200 on this trade right here. So yeah, 1 to 3, a risk reward of 1 to 3.3. And this was textbook. This was still in line with my overall strategy, but it just required me to watch this play out and not chase a train that had already left the station, is the analogy that I like to use. Because a lot of the times, we'll see a big candle like this and we'll want to get in, we'll want to buy this immediately because we see the momentum. And in some cases, it's a bull trap, and it'll turn around right after on you, and you'll get stopped out, and that's not fun. That's not a fun time at all, right? So, yeah, what happened here? I'll just change this one to the 5 minute, so this is a little bit easier to see. So I have my Fibonacci marked up to this 5 minute leg because that's the leg that I looked to go long off of this trade. And wow, look at this. I mean, you can't make this up. It takes out my take profit and it's already pulling all the way back to damn near my entry, which is crazy, but that's just part of the game. That's why you have your targets and you get out when you can. Okay, so the initial fib that I was looking at was actually this 4-hour low to this high. So if we just look at this from a replay standpoint, look at this from a replay standpoint, what I was looking at was this right here, right? So there was no price for me to go off of any new legs, and so I have to put my stop to the low to then the high. That's the fib, okay? This gray area is a 15-minute fair value gap, and this is what I waited for price to do, was come back into this fair value gap and actually tap equilibrium, because when we're between the 236 and the 50 level like this, I'm going to wait for this level to be tapped, even though we're inside of a 50-minute fair value gap. I'm going to wait for this 50 level to get tapped before looking to go long. So if I just switch down to the 1 minute, just because I'm on replay mode here, I love replay mode. And where's my little toggle switch thing? It's probably behind. Oh yeah, right here. Okay, that's right in the middle. So let's go 1 minute at a time. We're going to go ahead and just do one candle at a time. Okay, so there you go. So I got my retest of this 50 level. Now keep in mind, this is a 15-minute fair value gap, so price has not yet closed to invalidate it, right? Because we are sitting at 8:51. I've got 9 minutes before this 15-minute candle closes and either invalidates or validates this 15-minute gap, right? So I click the next button, and what I'm looking for is I'm actually looking for this fair value gap to be inversed. And you'll see here in just a second why I didn't take this trade. Okay, so this candle closes just barely misses the mark to invalidate this fair value gap. And I'm like, okay, I'll wait another minute. That's totally fine. What happens in the next minute? That happens in the next minute. And now at this point, I can't enter off of this right here. Okay, it's just my risk reward is not going to be optimal. Even though I get this inverse fair value gap, I get this change in the state as well. Like this would be a good setup. And I could have taken this long and at least targeted these highs, but then my stop loss would have had to been down here. Like this would have looked like this, right? So I have a negative R trade as a 1 to 0.63. Like that's just not optimal whatsoever. Excuse me. So what I had to do was I had to wait. And I waited for price to create a new 5-minute leg. So let's go ahead and just remove this right here as well as this Fibonacci. So this 15-minute fair value gap is still valid. Like if we look at the 15-minute, we've tapped into it and we're rejecting out of it, okay? Now my only option in this situation is to wait for a pullback. And I'm going to be waiting for a pullback once we actually get a new 5-minute leg. So there we go. We got another 5-minute candle right here. So this is our new leg. This is our new Fibonacci leg, okay? Now the cool thing about this is I'm being patient. Even though we're at equilibrium, we're not in my 15-minute fair value gap yet. So what do I have to do? I have to wait for price to come back into the 15-minute fair value gap and at least tap that 705 level, because I know at the very least it's going to tap that 705 level if we break below the 50, okay? Let's just hit the next button. Next button. All right, so look at this. So on the 1-minute time frame here, this is exactly what this looks like over here, but just for the sake of this example, we get our inverse fair value gap right here. We're delivering off of the 705 level. We're delivering out of a 15-minute bullish fair value gap. Our 4-hour candle is bullish. Now, what I did was I waited for a bit of a pullback to the inverse fair value gap to get just a little bit of a better risk to reward. I think my risk to reward would have been like under a 1 to 3 right here. So I was anticipating some kind of pullback, and I was okay with doing that because it's Friday. It's a little bit messy. So I wait. All right, so there's the pullback. So I entered off of this candle right here, and let's just see what happens. So this candle actually missed my TP by like a tick. Like it was so close. And the reason I was marking this up is because there's actually a larger hourly fair value gap to the left that you can't see, which is got consequent encroachment. Basically, consequent encroachment, which is the mid-level of that fair value gap, is right around here. So I knew at the very least we would come into consequent encroachment on that hourly, and I was sweating a little bit here because we missed my take profit by a tick, and I'm already 50% back to my entry. So I'm like, okay, well, I can't manage the trade. So I sat on my hands and sweated bullets, and then this is gave me a little bit of a sigh of relief. And then I think it was the next candle. Actually, hold on, let me just hit play. There we go. So it was it was a couple candles later that I actually got my take profit hit, and I was done trading for the day because that was just a pretty there's a lot going on here. Like you got FOMO for missing out on this move over here. Then you have to be super patient and wait for price to actually come back to that 15-minute fair value gap. Like in this situation, if you look at this right over here, some people will see this rejecting the 50 level and come really close to that fair value gap, and then they'll see this change in the state candle right here, and they'll enter long because they're seeing equilibrium, they're seeing, almost touching the 15-minute fair value gap, and this is why you have to be so disciplined with your rules, because if these things aren't happening, then there's no trade. But old me would have probably entered off of this candle because I'm seeing a reaction, 2 bullish candles back to back. But what would have happened? I would have been stopped out immediately, right? So yeah, that's why it's so important to, you do not flex the rules. I don't care if you're like a point away from these levels. Like you got to double and triple check to make sure you have your fib marked up properly. But I think what's more important is not taking the trade, even if the trade does play out. You have to allow yourself to know that, like, you have to know and force yourself to not take trades even though it looks like you're missing out. Like FOMO is, I would say, just as hard as revenge trading. Um, and those two go hand in hand, right? So, the revenge trading, the over trading, the FOMO, like if you know those things are at play, then you have to be disciplined to force yourself to follow your rules to a T so that at the very least you know that if you lose this trade, you're not breaking your rules, right? Because when you get into losing streaks, and it's inevitable that you will, you're going to start to flex because you've been flexing the rules. You're going to keep flexing the rules, right? And that's going to lead to you not coming out of the winning streak because you're not following your data, you're not following the strategy, you're not following your rules. And so you're going to end up coming out with a bit of a different strategy from that losing streak than what you went into it with. And most people won't recover from a losing streak like that if they flex their rules. If you have very kind of willy-nilly rules and so you're not being specific about how you actually trade, then I mean you might as well just throw the towel in now, right? Because what's the point of applying any strategy to the markets if you're not following it? Like the markets are a representation of what I like to call chaotic order, because this is very chaotic. Like from just looking at this, like from the naked eye, this is chaotic. There's a lot of there's a lot to look at here, especially on the 1 minute time frames. But if you're looking at even 5 minute time frames, it's messy. 15-minute time frames, it's kind of messy. To the average person, this probably looks a little bit choppy and a little bit out of the ordinary for what they would like to trade. But because I know my system inside and out, I'm not scared by this price action. I don't care that we are in this chop right here because I know I can still make money as long as I have my confluences here. I know I have my higher time frame 4 hour in line with my bias of going long. I know that I'm delivering out a 15-minute for value gap. I know that I've waited to respect the 705. And if I miss a move like this that's not optimal for my risk to reward, then why would I bother taking that trade anyways? Like, you might as well go to the casino and play slots if you want to have a negative risk to reward. I don't want to play within an environment that has a negative R. I want to have my optimal R, and I want to see that in order to get into the trade. And I know that based on my back testing and my data. So, anyways, that's a little bit of a rant. But yeah, let me see if I can open up my FTMO here and just show you what I did today, so you don't think I'm full of crap. And keep in mind, like this is what I'm showing you is paper trading. Okay, this is not real money. Everything I'm showing you here is on a free trial. I think it's this one here. Let's see if it still tracked it. I can pull over my. Okay, yeah, it did track it. So this was today, March 6th, $5,200. Okay, and the cool thing about this is it shows my win rate, my average profit, my average loss. That's what I like. I like a 1 to 2 in terms of my loss being half of my profit. I can see the number of trades. This is not accurate because this goes off of actual lots, I believe. I'll have to double check that. I don't know why it says 43 trades. I for sure did not take 43 positions unless there was like multiple 10 lot entries, which probably did happen. Profit factor is really good. Anything above a 1 means the strategy is net profitable. So this is a very profitable strategy. My average risk reward is around that 1 to 2. And you can see this week I've been nothing but green. Made $16,000 paper trading. Keep that in mind. I want to be very transparent about that. But yeah, this is all of the trades, I believe. I think this is all of them right here. Let's see. Oh, there's 5 pages. Okay. Yeah, so I mean, yesterday I had a couple losses, but I came back and uh, was able to win those trades. And then today I had this position that I scaled in on top of this position, which led to me having like $5,200 in profit. And there was NFB today, but that was this morning. So yeah, overall, like really solid, a solid trading week. And like I said, I'm going to take this and I'm going to go and purchase a new FTMO challenge, and I'm going to document this process. So you're not familiar with FTMO and prop firms. Basically, there's these different size accounts, and you can pay a one-time fee to go through an evaluation. It's a two-step evaluation in this case to get funded 100,000 US dollars, and you keep 90% of the profits. They keep 10, and you actually get refunded the cost of the challenge in your first payout when you go to request your first payout. Now, there's some other rules that you got to be aware of, like you can't be trading news with the standard account. You can't be holding trades overnight over the weekend. There's higher leverage. Instead of 1 to 30, you're getting 1 to 100. This specific free trial that I traded with was actually a swing account because I wanted to see how much I could actually trade with in terms of lot sizes. But overall, this has been really great. So yeah, I'm gonna go ahead and grab one of these challenges and document the process starting next week, and using this exact strategy that I've been talking about. So looking forward to it. I'll see you guys in the next one.